Awesome. As folks join, please pop in the chat and say either one, how many audits you have gone through at this point, if this is preparing for your first, if you are a seasoned veteran and could host this webinar with us, and then where you're calling from. Would be great. 7 in Boston. All right, Joe. I love it. First year audit, perfect, Gina. Well, hopefully we can tailor that for you. 8+ in the last 3 years, great, wonderful. Well, I'm hoping for some of you that are on your 7th or 8th audit that you are also popping in and adding to some of the discussion as we have Mark and Parker here. First in New Jersey, awesome. Wonderful. All right, well, I'm going to go ahead and start sharing our slides as folks roll on in. Alrighty, can everyone see my slides? We'll have a yes from Mark and Parker, I guess, is the
Yeah, I got it.
awesome. Well, from the chat, really clear that we have some seasoned audit experts on board. We also have some people preparing for their very first audit. So we're really excited to hopefully provide some tips, some tricks, how to avoid audit headaches for folks regardless of where they're at in their level of audit experience, and have both Parker and Mark here today, which will shortly introduce themselves for hopefully what is a really tactical takeaway session on how to prepare for your upcoming audit. So with that, our roadmap and jumping in for today, we're going to start with some intros from Mark and Parker of their prior experiences with audit, what they're excited about to cover. We'll then spend some time covering the basics around audit prep, what you need to have on hand going into your first or 7th or 8th financial audit. We'll then spend some time covering audit nightmares. So these are nightmare scenarios that Mark, that Parker have seen, experienced, been a part of, and how to prevent those to avoid audit headaches in the future. And then easy audit tips, we'll sort of round it out with some quick wins of how you should broadly think about making your audit as easy as possible. Finally, we'll end with a Q&A. That being said, we welcome questions the entire time. So obviously, if there's anything that Parker or Mark are touching on that's helpful to get a level additional detail, we'll take questions throughout. And then at the end of the webinar, we'll also have some dedicated time to be able to discuss any Q&A. So with that said, really excited for our time today. And we'll turn it over to Mark and Parker for a quick round of intros. Mark, if you want to get us started.
Hey, thanks, Tierney, and thanks, Parker and Numeric team for having me on here today. We've been excited about our partnership at Riveron, so look forward to continuing that with the team as Numeric grows and this partnership flourishes. But for my personal background, 15 plus years of experience. I actually started in corporate accounting, so started at a public company. Then I was at EY for several years, so been on the audit side, similar to many folks. Then I jumped into consulting for about 8 years. And then for about a 2.5 year stint, I went and worked at a public company. So public company, M&A, SEC reporting, technical accounting. And then I led finance at a venture capital back. So kind of been on both sides of it. Recently, I transitioned back to consulting. So all throughout, that's many different audits in forms on both sides, whether it be a consultant or an auditor or actually a practitioner. So been through that. Hopefully I can give you a little bit of my experience. A little bit about Riveron just briefly. So Riveron is a business advisory firm that serves the office of the CFO. So really kind of all throughout the process. Heavily working with kind of private equity backed, venture capital backed companies that are going through transition phases. We do everything from financial due diligence on the front end of a transaction through the back end of restructuring and turnaround. What I do would be called accounting advisory. So accounting and finance operations, and of which audit readiness is one of the things we do frequently. So happy to be here. Thanks again, team.
Awesome. All right, Parker, over to you.
Yeah, thank you, Tierney, and Mark. Thanks for doing this. It's always a pleasure to get the chance to hop on webinars with you. And we've really enjoyed our work with Riveron. As a quick background to myself, I'm one of the co-founders and CEO here at Numeric. Prior to Numeric, ran a finance and accounting org. And so I've had the privilege of going through a couple audits. Some folks in the chat have already sort of beat me in terms of these counts that they've been through. So again, maybe I shouldn't even be up here, but I do have some perspectives and thoughts. And I think sort of one angle that I will bring to this conversation is actually the fact that I did not come from an accounting background whatsoever. And so one of the businesses I joined, a company, Hearth, which was a venture-backed startup, actually joined as the first finance hire with no accounting or finance background. Started, I think, on like January 3rd or whatever the first working day is after the New Year's, and was immediately told that unbeknownst to me in taking an offer, that the first project would be going through an audit. And the firm had already actually hired a large international audit firm to come in and start their audit in March. And we were so far away from being audit ready. We had made an acquisition in the prior year that had never been accounted for. We had a balance sheet that I don't think anyone knew what was on or why was on it. Um, and that was a real sort of like trial by fire when it comes to going from sort of 0 to 100 in terms of getting ready, cleaning up the books, writing policies, leveraging the auditors, making a lot of mistakes, and then going through subsequent ones and starting to sort of take a lot of those learnings and improve the process and procedures. So really excited to sort of share some of those experiences and kind of some of the learnings and places which doing it again I would do things very differently, or some places where I would do it exactly the same. And so really excited for this conversation. As a really very quick introduction about Numeric, we sell an AI first close management product today. So we work with a lot of mid-sized enterprise companies to help them automate core procedures around managing their close process, managing balance sheet reconciliations, variance analysis procedures, anomaly detection, and a lot of the ongoing work that in a very natural way sort of oftentimes dovetails directly into audit prep and sort of readiness.
Awesome. Perfect. So with those intros, we're going to launch right into audit prep basics. So again, covering here before we get into some of the possible nightmare scenarios, what are the boxes that need to be checked to feel good about going into that first initial audit? So I'll kick it over to Mark to sort of give us how he thinks about the high level framing of what to have on hand ahead of an audit.
Yeah, I think these are what we kind of call low-hanging fruit, the things you need to be ahead of before they're coming. So everybody knows the high value transactions, right? If you've gone through a fundraising round, if you've raised any new equity or debt or anything like that, you need to have that on hand. Like you've got to have that documentation ready and available and sharing it as the transaction happens, right? You're not waiting until a later time. Like, oh, we have this huge high value transaction and audit time. You can actually get ahead of that. And we'll talk some more about that later. High volume transactions just tend to be a lot of volume in the audit. So things such as revenue, right? Like get ahead of those, create processes where you're retaining documentation the right way. If you have any complex or unusual revenue arrangements, which many times these smaller companies are following the terms and conditions of their larger customers, you have complex arrangements that are commercially different. So you need to be ahead of those. So think those type of things, like where there's complexity and judgment involved, be ahead of those. Get the documentation now, get it in front of your auditors, and just have a specific place to be able to explain that. And sometimes it might be a memo, particularly on debt and equity transactions. You might want to go ahead and document that in a memo because they're likely going to ask for that at audit time. So these are just some quick hitting items. Here's some ideas of what high volume might be. So bank statements, bank recs, like let's go ahead and get those ready. Cash receipts, go ahead and get those out of your bank portal and show the auditors how you got the report. Like, oh, we pulled it from here. This is how we got it. This is complete and accurate. And here's how it ties out. Same thing with cash disbursements. There will be a lot of checking of that, particularly on your subsequent events to look at cutoff. So be prepared with those things early, and particularly if you have large disbursements or large receipts, like they're going to be asked for, right? You're going to produce documentation for that audit. So get ahead of those. And we'll talk a little bit more about getting ahead of things later. And then there's industry dependent things, right? If you're in manufacturing, you've got heavy machinery, heavy assets, be prepared for that stuff. I've made, big CapEx transactions, those type of things, really thinking through, hey, from that auditor lens, I know what I'm going to ask for. Many of us have been on that audit side of it. If you haven't, you kind of know what are impactful for the business, and it's likely going to be something that's going to be heavily scrutinized in an audit. So just kind of get ahead of those. So considerable judgment, revenue, deferred revenue. I mean, a lot of technology companies, right? This is the bulk of the audit. I would say you 80+% of your time is spent on revenue transactions, and how to account for those. So what are the technical accounting considerations? Things like, did you have new revenue streams this year? Big deal, big deal. A lot of, companies are moving into new verticals and wanting to sell different types of products. Have you documented that and got it in front of your auditors quickly? I think this is a really cool feature with Numeric where you have this gap accounting assistant, right? Where you can go ask questions, you can get to a first draft pretty easily, and even look at comparable companies that might have comparable products, right? So get ahead of that process. A lot of times things are moving quickly, but we'll talk about this. You don't want to have to go back in time later. But and then liabilities, leases, some of these things that we've kind of already talked about, debt and equity. I think being ahead of the technical accounting considerations, where there is judgment involved and you have to make some complex decisions. That's where this, the numeric gap accounting assistant can be a really helpful type tool to get ahead of it and get to that first draft and save you a lot of time. Parker, I don't know if you had any additional points to add on these.
Yeah. I mean, I think the sort of I think the theme here, which I think is really valuable that you keep coming back to is like getting ahead of these things. And I think the goal should be, something where there's a lot of judgment. Ideally, we're not doing this work during the audit itself, right? This is work that's been done during the period while these are going on. And that was like a very stark difference from sort of like the first audit I went through versus like subsequent ones, where it's like joining a company in January and having the auditors show up, like a month or two later, like everything was being done during the audit. We were making up software capitalization policies the day before they wanted to test, a schedule which didn't exist. And that is like the most painful way to go do it, is sort of having to kind of, just like, kind of create things as the audit is going on. And I think one of the things which, I certainly really appreciated was in future audits how willing our partners were to go work on things early, to go have conversations around, hey, we're opening up a new business line where we're going to go start processing payments. Like, let's start talking about what revenue recognition for that looks like, before we maybe even have launched the product, or as we sort of have our first customers. And it could be 9 months before that audit's really going to take place. But those are conversations which just, I think, for everyone, life is easier if you've had lead time to go make sure everything is clean, looks good, everyone's aligned on these processes. And so, I think in many ways, just like hopefully getting in front of these more complex areas just makes everything go smoother, and everyone's time be better spent, during the audit when we're really getting into testing and some of the more, controls and details.
Awesome. And then kind of as a summary of a lot of that, have jotted down here a holistic, relatively holistic view of what do controllers need to have ready ahead of their first audits. Mark, anything that you think hasn't really been covered by you and Parker so far around core things that controllers should have on the ready?
I think we touched on the reconciliation supporting and the technical accounting, but I think the file organization and that audit trail, of which your Numeric is a wonderful tool to be able to retain some of that in the cloud and easily accessible. But having a file system, even a naming convention for like journal entries and things like that, so that hey, this was this month for this, this is why, and something like that, it makes it really easy to go pull those samples. And we'll talk a little bit about this later, but if this is not your first audit and this is your maybe second or third, go grab that PBC list from last year. Start putting that stuff in a folder for the current year that is going to be needed, and start to create that audit trail with your month-end checklist. And we'll talk about things like getting a deeper close in each month. A lot of companies may close quarterly. They may do a soft close throughout the year, and then oh, you're in. We're going to do a hard close. Regardless of what your close looks like, keeping an audit trail of all those actions, approvals, those type of things that auditors are going to ask for. I think those last two items are imperative to smooth project management for the audit, and just what Parker was touching on, getting ahead of things. If you create that trail and have easily accessible files, it's going to show in your audit, I promise.
Awesome. And then, Parker, do you want to touch on anything related to how companies that maybe transition over to numeric are typically structuring things ahead of their audit?
I think Mark covered a lot of this. And again, so much of the theme here comes back to like, as you sort of build out scale, as you build out practice, just doing things more continuously, and I think it's a theme of a lot of companies we work with. It is always that sort of push of every month, every quarter, every year end, how are we driving more towards a continuous close where we're accounting for, all the complex, accounting practices in as close to real time as possible. And practically that's like not reasonable for a lot of companies, early on in the maturity cycle. And maybe that shouldn't be the goal, but I think as companies continue to grow and mature into it, you just sort of increasingly want to go do more monthly, more quarterly, more even during the period itself to kind of drive both efficiencies for the team, but just making sure that, you sort of have a posturing that almost ideally any month you could go get through an audit, and just be ready to go. And if that's the sort of place where people feel like they are, then you should feel really good about the practices and processes on your team.
Awesome. All right. So with that basics on what controllers should have on hand, now entering our 5 audit nightmares and prevention. So structure here is we're going to talk about nightmares that Mark, that Parker has potentially lived through, experienced, seen from a distance, and then some of the things that we've seen be really effective to prevent those nightmare scenarios. So we'll kick it off with this first one, Parker, that's probably most relevant to your experience of time traveling.
Yeah. I think yeah, like we were just talking about this, right? There's nothing is I think it's very unpleasant, especially trying to like the last bullet here, figure out things that other people did at the company that may no longer be there. I mean, that's really a pain, sort of having to go back and backtrack and try and, recount what events happened in February of last year with different people, different teams. And so really sort of trying to make sure that you are getting your documentation in order on an ongoing and a continuous basis. Your sort of future self will thank you for that. And it's always about sort of just balancing that sort of practical bandwidth constraints with, a sort of desire to improve every month. And yeah, I think what's really fun to work with companies is sort of, my mindset would be like, your goal isn't to try and change everything next month. I would hope the takeaway from this is not like, go do 100 extra things next month, go, really totally throw the processes out. But it's all about getting a little bit better, and sort of improving and trying to pull a couple things forward and almost just building a kind of team culture around a perspective that we can go make 1 or 2 improvements, each period that's going to make, the audit, the sort of forward-looking processes better.
Awesome. And I think touched on a lot of this, but anything, Parker, that you want to add around time traveling prevention, how teams get ahead of this?
Yeah, a couple of just sort of like very tactical items here. One, that sort of core month-end close checklist, is just necessary at the end of the day to make sure everything is being completed as expected. And this is just a whether it's an accounting team or any team at a company, making sure people are documenting what are the recurring processes that we're managing, who's responsible for what, when are we doing them, what's happening. You want to build that playbook. And it does not take a ton of work, but it is something that everyone is better off for sort of centralizing these pieces into place, keeping it organized, and making sure that everything has been completed as expected. Or if there's a period where you're not completing the things that you are intending to, exactly what that is, so you can make sure you're getting ahead of it in the next periods. I think sort of secondly from there, when it comes to the maturity process, is really then it's about starting to go through the balance sheet, right? Every audit is centered around sort of substantiating the balance sheet. And so can you go through and start to really build processes where you are reconciling your, complete balance sheet, ideally at a subsidiary level every single period? Do you have the right working papers, the right documentation, the right support to, again, feel really good that at any period end, you could go through an audit and you could pass given the quality of the work that's being done? Again, it's like you should start with high risk accounts. You should start with those really important ones. Maybe it's deferred revenue for SaaS businesses or, different types of accounts for companies in different industries, but, really driving at that sort of goal, which should be 100%, coverage of the balance sheet when it comes to documentation and substantiating it. And then lastly, from an audit trail perspective, this is just sort of like should happen, right? This should just be sort of not a core piece that everyone's worried about on an ongoing basis, but there's just no reason not to get it for free, right? Track the work that's getting done, make sure everything's being documented, make sure that if auditors come back and they want to have questions about what was done when, what notes were left, what comments, what feedback did people have, that's all saved down and sort of archived in a way that's accessible.
Perfect. All right. So audit survival guide nightmare number 2. Mark, do you want to talk about poor auditor communication?
Yeah, I think we forgot one nightmare. Like I forgot to get my coffee beans before the audit started. Like that's kind of a accounting joke, an accounting joke. Well, hopefully you don't need any coffee if we're giving you the right tips.
Oh,
Honestly.
that's strong. I don't know if there's a webinar strong enough for that.
Yeah, no, as I
Maybe.
as I drink coffee and talk about this. So totally with you. But poor auditor communication. We talked a little bit about this earlier, getting in front of things, right? And well, I'll also touch on something very tactical on the next slide, but here's an example of something. You rolled out a new work stream on the revenue. You didn't really do the research beforehand, or maybe someone else did it before you and you inherited it, and you get into the audit and you start realizing as auditors are going through it that, oh no, I was accounting for this completely wrong. And so then you have to go backwards where this could have been avoided by talking to the auditors, as Parker said, even before, hey, we're in the process of rolling this out. This is what we think we're supposed to do. It's going to trigger deferred revenue. It might trigger accrued revenue. We're going to bill at these intervals. Is it going to be overtime recognition? Is it going to be point in time? Maybe there's an onboarding fee, depending on what type of product there is. So having that conversation early with your auditor, I'm not saying they're going to sign off on it, right? But at least you've given them the understanding that we have a new product. Here's what it is. And you really might, sometimes you might have to push for a more solid answer. Like, we really want to get a better answer right now. So can you actually go audit this? Can you send this to your national office? Can you send this to your technical accounting lead so that we're getting a solid answer now? So that we don't get to year end and there's like, well, we didn't actually audit this. So remember, push for yourself, advocate for yourself. Don't just take that short answer of, yeah, this looks right. Like, make sure they ran it all the way through. And that comes to this one point right here. If you're going through your first audit, or maybe you haven't gone through an audit, or you're considering switching, when you look at your auditors, you should ask for companies that are similar to your size, similar to your scope, have similar products, and you actually want the people on that team to understand it. I've seen situations where auditors have maybe audited a manufacturing company and they used to do tech and they don't understand any of the cost accounting, right? So you have an auditor asking a question without any of the context. So this isn't just the partner, right? You know to ask for what the team understands, because there's going to be a massive amount of efficiencies gained by having that team understanding your business. Second thing I'll say is, similar to many of us, we are in a place where the accounting function is very lean right now, right? Where we have a lack of accountants. Um, Audit firms have the same thing. Make sure they have the bandwidth when you're going through that selection process. Ask the questions about scheduling. Ask them, well, what if we aren't able to meet this schedule? Are we still going to get the team that we desire? Those type of questions as you're going through the selection process. It will help you understand the level of service you're going to get, because they have deadlines. People are working on different audits as well, and they have schedules. So make sure you understand the entire package, not just, I'm going to pick this name because I heard that they did a good job. Like, dig for yourself and advocate for yourself. And we talked about that prioritizing communication. I think this is just continue to get in front of it, right? This is making sure you're talking with your team as things come up, particularly high value type items. We mentioned the revenue, debt and equity. Like, if you've raised debt, and you brought that on for the first time, and maybe it's got warrants on it, guaranteed you're going to need a technical accounting memo. Like, go ahead and get in front of that, surface it to the auditors, get in front of them, so that when year end comes and you have a PBC list and they're saying, how did you account for this? Please give us a technical accounting. You can say, hey, I gave this to you 6 months ago, and here's what we did. So this is just getting in front of it, and understanding how you create that positive relationship. Over communication is going to be much better, right? You don't want it to be, I haven't talked to you all year, and then I get a PBC list the third week of January for a March year end, and oh, hey, we're just going to check some boxes and move on. It will create an over communication on their part the more you communicate.
Yeah, if I can jump in too, I think I want to just echo one of Mark's first points, which was pushing your audit team. I think you can get more out of them, I think, than maybe folks oftentimes expect in terms of even templates for how folks have built other schedules that they've seen, or perspectives earlier and more often on and more detailed around your policies or your intentions of how you're going to account for certain things. And I do think that's just super valuable. And so I second also think that's exactly in many ways what they want to see. Like, this is a partnership. Your audit team is looking for, candidly, the right signals that you're going to be a good partner to them and make their life easier. And part of that is really communicating effectively and building that relationship. I mean, I think, like, in many ways, going back to, my first experience going through an audit, like, I was kind of the like nightmare client, like no accounting background, very little prep, kind of walking, into a room, not knowing what to expect. But like, one of the things I really focused on was like, I'm going to be transparent. I'm going to be clear about where we are. And I'm going to make sure they know that every day I'm showing up ready to partner with them, ready to learn, ready to work with them, ready to get the thing done together. And I think that was just so central, and it's really appreciated because auditors are so often sort of left just at the whims of what are they getting, what can they actually do today, and nothing is more frustrating than the sort of not being aligned on what do we want to audit today? Do we have the right information? Do we have the right context? So I think that sort of partnership is like really focusing on that. It makes everything just so much easier. And I would say sort of the third piece of that is like there's so much judgment required in these decisions. These are not all black and white, check boxes as to how certain revenue lines should be accounted for, how we want to go run these pieces. Should we capitalize software at all? These types of questions, there's a lot of judgment, and you're going to get the best answer again by focusing on that partnership and building, a relationship that you can kind of get to the crux and sort of be really clear and transparent with. So, really agree with a lot of your points, Mark.
All right, timer number 3. Parker, do you want to take a little bit of discussion on poor data hygiene?
Yeah, I think this gets back to systems, process, ongoing routines and rituals. Having the right documentation, having the right systems in place. What you don't want to go is find out, 12 months from now that you weren't capturing the right documentation or details that you need to go, pass successfully in audit. And so, again, focus on building these processes over time, focus on the high risk areas, and focus on making sure that you have an ability for, kind of as quick and simple retrieval of this data as possible. But I think we can keep moving, Tierney.
Stops away. There we go.
Awesome.
Yeah.
So a couple more sort of tactical thoughts then kind of on top of, data hygiene perspectives, right? One, almost everything is going to get tied back to a doc in some sense. So make sure you have the right places to go store those documents, organize those documents, whether they're revenue contracts, invoices, leases, you name it. You want to go make sure you can ideally double click back to the doc, and back to the information that's going to be required. As companies grow and mature, I think there are a lot of companies that will go through a first time audit, potentially on a QuickBooks, type sort of SMB product, but, pretty quickly, it's becomes pretty clear, if you want to implement the right controls as the business scales, you're going to need to move on to an ERP that supports, more controls, more customization, and just more rigor around ensuring the accounting is being successfully managed and the environment in which it's being done is being managed correctly. Keep materiality thresholds low for a first year audit. That's an interesting one. I think you should be capturing all the documentation, but and then the flip side is if there's certain things where you actually want to push that, threshold high for certain things like, projects for capitalization or whatnot, like there's going to be a balance depending on, what you're working on, exactly how it's organized. But Mark, I'll turn over to you if you have any other notes here.
Yeah, I want to highlight that last one. I think sometimes the view of materiality is going to be different, right? You're like, oh, well, this is, $15,000. It's not that big of a deal. Just remember a bunch of $15,000 transactions that you think are material become material. So just think lower. I think setting your internal controls, I think the numeric functionality of anomaly detection, really cool functionality, right? To be able to detect things that are coming in at a certain level. And I think you can do that in a lot of ERPs as well as understanding approval thresholds and those type of things, set them lower. It's better for internal control hygiene. It's better just generally to do that. And as you get better and more effective, as the company grows, the materiality will naturally increase. Materiality can be your friend, but when you're thinking about internal controls, I would think less about materiality, more obviously about the right size for your company, right? So you can't do everything. Segregation duties are not going to be perfect, but you can put policies and procedures in place to be able to capture a lot of this at a really low threshold.
All right. Nightmare number 4, team burnout. What maybe people have gone through 7 or 8 audits have felt acutely.
I think this
Mark,
was,
you want to speak to the fear there?
I believe it was Yulia in the chat here that said she went through 8 in 3 years. If
Oh,
she's still around, like that's amazing. Good for you. That's not good for you. I'm sorry, is what I'm actually meant by that. Audits are burdensome, right? They're out, generally they're included in a job description, right? It says somewhere like, getting through an audit or compliance, those type of things. But if they're not done right, I've seen them be the single reason why people leave a company, right? They can be the reason. Like January through May is so terrible because my audit is horrible. And I also only have a team of 3 people handling a blank $1 million business. Because just as I mentioned, most people are understaffed, right? There's not enough accountants to go around. Compliance is failing even at public companies because of that, and people want to keep their costs low. And a lot of times, SG&A is where that cost gets controlled. So you can't hire the people that you would like to. So you're able to do that audit quickly. The more you get in front of it, the better it's going to be for your entire team, right? If you create processes now in March for that year end, you're going to have 9 months of basically doing little audits, as Parker said, being ready for the audit all throughout the year. And then it's just kind of checking the box, similar to what you do with like a monthly close, right? Yeah, there's more you have to do. I'm not brushing it to the side, but the easiest way to get through burnout and control that is to figure out ways to build audit readiness into your day-to-day processes, right? And so here, a couple of tips here. Managing the audit, project management, view this as a project like you would ERP, new product rollout, things like that, needs to be managed. Needs to definitely be managed, and you start preparing for your audit well in advance. And then first year audits, they can be very painful, right? Depending on, if you select the auditor and understand those things, I think you'll have a better feel for the audit throughout the year. But also keep in mind, things are going to come up in first year audits, right? Things that you do not expect that maybe you weren't prepared for. Now you can get in front of those the second year. That's why I say first year audits can be particularly impactful. So project management, have somebody on your team that's the go-to, whether it's controller, accounting manager. A lot of times Riveron as an external support steps in with companies to be the project manager for the audit, just to give them extra people to navigate it. And also what we talked about is pushing the auditors. A lot of times auditors have a timeline. You understand their timeline. You can understand your timeline, and holding them accountable, holding yourself accountable. That's what it's about. So consider that external help, especially if you're going through a first time audit, to set that base level of documentation and project manage this throughout the year, right? Somebody had a really good point of meeting with the auditor at the beginning of the timeline. We'll talk about the push for interim testing as you get further along in your audit cycle. We'll talk about that later in the deck. But there are so many ways to project manage this effectively, instead of just like, here's a PBC list in January or whatever your year end is. We need these things by this date. And if we don't get them, then our timeline's not going to work, right? Hey, give me a PBC list in September. This is what we're going to need, base level documentation. Push them to give it to you. Start accumulating that then. Your monthly close is built the way it needs to in a tool like a numeric, you have your documentation available today, and you're already ahead of some of that. So think about it like a project, manage it like a project, and it will pay dividends over time and just become part of your day-to-day. We'll talk about this constant audit prep, right? Constant audit preparation is the way to think about this.
Yeah, if I can jump in here too, I also think it's worth sort of like highlighting some of the sort of just internal management as well that should happen around this, which like even the best run audit is going to be hard. There's like no perfect world where everything is just smooth sailing, and it's not. doesn't require some late nights and some scrambling as much as we would all like it to. And so I think one of the things to be cognizant of is, one, manage, sort of the internal team. There are a lot of folks, at a company who are going to have no idea what going through an audit entails. And so being clear about what is the team doing? What are they working on? Why is this, what is the context? What are the trade-offs of things that the accounting team and finance team aren't going to be able to do because they're working on the audit? Make trade-offs. If there are other projects or things that have to go on hold, communicate those to others and make it really clear to folks so that you don't also aren't layering on, additional stressors and sort of additional projects that could be, moved around or sort of managed differently. And then I also just would highlight, um, again, as things don't go to plan, and if there are folks in the team, if there are places where people have to go really sprint to get things done for some of these deadlines, recognize that, make sure people are taking time off, make sure that, as you see people sort of, working hard and sort of exhibiting some of those signs of burnout, like as a manager, you recognize that, and sort of uh, make sure to sort of be cognizant of it. Because oftentimes it's actually easier to see other people burning out than to realize yourself that you're burning out. And so that's kind of on you and on others around folks to sort of try and be proactive about that and communicate it.
Yeah, I will call attention briefly to David had a really interesting comment in the chat around sort of how to structure that audit workload and his perspective being putting 85% of that on a person who is the project manager of the audit and then having that person almost fully removed from the rest of their core responsibilities to like keep that work stream really clear and then potentially to help prevent team burnout. I'm curious, Mark, Parker, like how do you think about sort of who bears the load on the team of the audit and if it makes sense to have that core project manager take a larger portion of it, if that's sort of been what you've seen dependent on like the team size potentially that you've worked with?
Yeah, I've definitely seen David's thought pattern play out pretty well, which is what I was mentioning, kind of have that project manager. In terms of who that is, it needs to be the person that's in the weeds enough to know the transactions, right? So let's say you have a structure, maybe a CFO, VP finance at the top, and then you've got a controller and an accounting manager. Almost certainly it's that accounting manager. Almost certainly it needs to be that person because they're going to understand day-to-day transactions. Really, all your team should, but in terms of shifting responsibilities, I think that the person that would be able to do that in David's scenario. But we all don't always have that luxury, depending on the size of your company. So sometimes it's external help, sometimes it shifts to a different person, but at a higher level. So I think the accounting manager is probably where I would put that, right? If I had three people in my org, because that person, it's easier to shift those responsibilities and they have understanding of the day-to-day transactions to be able to, if a single question is asked about a transaction, they probably know it because the nature of that organization.
Yep.
Awesome. It's something, Mark, we briefly talked about is to close this, is that can be a career opportunity as well for a rising accounting manager to be able to sort of oversee that as well. And so stressful for sure, potentially at risk of burnout, but also if they want a controllership further down the road can be one way in which that proximity, that visibility with the CFO, with the rest of the team can also help. So blessing and a curse perhaps, but
Yeah.
awesome. Well, in terms of our fifth and final audit nightmare, the endless audit, Mark, do you want to walk us through what this entails?
Yeah, this kind of goes with Yulia's comment about going through M&A audits for a public company. These are endless. And I've been in this scenario. I think one of my years in audit, I had a 12/31 year end, a 3/31 year end, a 6/30, and a 9/30 year end. So I was continuously auditing year end. So I was on the other side. But sometimes, and I know people that work in industry that maybe have subsidiaries with different timelines. Like I've seen this in the mutual fund industry and other places where you've got different timelines and you're literally going through audit all year. But this is the case where you're going to miss your deadline, right? Because you're so far behind, using Parker's example where he jumped in January and he had no history and didn't understand that. That's where things start to get out of hand. If you don't have documentation, you're trying to go back in time, and there's no project manager, these things can spiral and you're starting to ask for waivers from your bank. You're starting to talk to your investors about, hey, we're we're going to miss this by 90 days. Can we get some sort of board resolution that this is okay? And you start to trip up compliance issues, debt covenants and things like that. So that's part of the reason why the constant communication, project management, and moving things forward gets in front of this, right? Endless audits. If it's M&A or something like that, like you've acquired a business, that's a whole separate thing, right? You're going to have to do more audit work because you're bringing on a whole business. But just the communications, over communication, project management. So a couple of tactical things here. Look at last year's takeaways, right? There's generally some sort of management letter comments from your auditor. How can you get in front of those? How can you remediate those in the year to make things smoother? Get the PBC list from last year. Understand the dates. Oh, they asked for it this date. We gave it 60 days later. What happened, right? It's a little bit of a postmortem, right? You're going through the audit and understanding what happened to get there. Flux explanations are a great one. A great example here. I have to do a year-over-year flux analysis for an account that has 50,000 transactions in it. And I'm doing this for a year. Well, there's a level of materiality. Auditors are going to ask, well, what caused these changes, right? Some of it's easy. Oh, this is AR. This is my change in revenue, that type of thing. But what if it's another account that has 15 different things that you've got to go pull? And they're going to ask for every one of them, right? Like they're going to, as part of their audit, where if you do a monthly or even a quarterly flux analysis with, and Numeric has a really cool tool to kind of do some of those first draft auto fluxes. You now understand what's driving changes so that when an auditor asks for a year over year, hey, I've got this because I've done it 12 times already. I know exactly what these are, and you can share those things and even give them access to a tool where they can see some of those explanations. So that's just an easy example to think about. Just a little bit of this time trial, this kind of accumulates everything. All of these 4 nightmares are going to create this endless audit nightmare, of which you wonder why people leave accounting. It's like these would be some of the reasons why, right? If you've through this 2 or 3 times and had to do it, it just gets really old. And you're like, why am I doing this? Where if you just create it as part of your day to day and it becomes part of your structure and your controls, that continuous audit prep is going to be a friend of yours by the end of the year.
All right. So with our nightmares behind us, rounding it out with some quick tips for an easy audit, a lot of this being sort of thematic points that Parker and Mark have made over the course, and then we'll enter some Q&A. So I think came through loud and clear potentially, but Mark, this was a quote that we pulled from you and some of the prep for this of, again, how folks should think about heading into an audit.
Yeah, this is just that, we have a compliance mindset as accountants, right? This is building that into thinking about what are my compliant, like you have tax things that you have to do. A lot of people are pulling those tax documents and keeping them as the year goes and not doing that over year. So let's do that with the audit as well. That continuous preparation and that monthly close cadence, like with an actual hard close, like creating a close, what are my accruals? What's outstanding on revenue? Do I need to go look at any of these transactions? Why am I not receiving this AR? And do I need to go reserve for it? Those type of things where I don't need to do this at year end once. Let's do this throughout the year so that by the time I get there, this is just the nature of the business. Create that continuous preparation mindset, practically, right? Hard month end closes. We put quotes and practice your audit, right? Yeah, you're going to have one-off things that you have to ask for year end, but this gets you those transactional level practice, to the point where you can provide these all the time, flagging those things that we've talked about, giving context for what the situation is, in a memo or some sort of email, some sort of documentation. And then, I think this was mentioned in the chat. Let's say you've been through 2 or 3 years audit, you're getting cleaner and cleaner. What can you move forward in the year? And this is where things start to get like really alleviating the burden, such as, testing the first 9 months of revenue transactions in Q4. If you're a calendar year in, this can really start to save you some time. in January through March and not become such a, a burden for the team at the beginning of the year, because there's so many other things that have to happen when you're, reporting to investors, or if you're a public company, it's a whole different discussion, but because you have to do it anyway. But building controls such that your auditor feels comfortable moving things forward, so that maybe at year end, you're only testing Q4 transactional level. So just things to think about as you get further in your audit journey.
Perfect. And then to round this out, this is my bad outdoors joke for any accountants that also happen to be outdoorsy folks. The concept of leave no trace in the outdoors, of obviously making sure that you're respecting the outdoors, is kind of the opposite with audit. And very much the theme of this is leave a trace, leave a really clear trace. So I think a good way to close out before we turn to Q&A. So we'll pause for a second and see if there are any questions for Mark, for Parker, for other folks in the chat as well, that are related to anything with audit prep. As for, oh yeah,
Appreciate
go
the
for it.
comments for everybody. I mean, I think these were
Yes,
really good on topic comments. So thanks everybody for interactive.
Agreed.
thank you, Christopher.
Yeah, real time feedback. Also good communication. I think don't be afraid. One thing I'll add here. Don't be afraid. A lot of times your auditors are leaving comments. Don't be afraid to give your audit team comments back. This is how you could do better next year. I had a particularly bad audit in industry at the venture capital backed company, and I gave feedback, particularly around a couple of team members that were just not responsive. And next year audit, they were going to be rolled off, right? So you give those comments. It's a two-way street, right? Make sure you are advocating for yourself, right? Generally, the audit for most of the small companies is the single largest service provider expense. It's a big expense. Hopefully you can get your fees down, but that's not what I've seen recently. But so think about this as like they're a service provider, they're still providing you a service. So you should be able to provide comments, right? A lot of times it feels like a one-way street of them telling you what to do. Advocate for yourself, project manage, and also share feedback. This is how it went. This needs to be better. And you'd be surprised, right? They're a service provider and it's a partnership. So if you share real feedback, good or bad, then things will typically open themselves up for open level communication.
All right, to wrap things out, so we don't have any questions coming in, definitely. Oh, there we go. All I needed to say was, perfect. All right, so it looks like we have a comment from David. The biggest pain points during audits for the first year have always been aligning on the 409A, going concern approach, agreeing on 606. Yeah, any comments on if that resonates with what also, Parker, from your experience in that first time audit, or Mark, your experience with audits, that you would add to that short list of pain points for first year audits?
I mean, I think the going concern is an interesting one, right? What is it? I don't know the exact percentage, but something more than like 70% of, startups fail, right? So you're kind of in a constant going concern battle. Is like, how do you document that? What does that look like? 606 revenue tends to be one of the biggest ones. And with, tech companies moving so quickly, you have to be in front of those new products, changes to products, different commercial terms, offering discounts. Those type of 606 things, David, is the things we were talking about earlier, right? Being in front of those, because that tends to be the biggest single thing for an audit, right? For the going concern stuff, if you've raised money recently, I think it's less of an issue. You just kind of have to document those type of things. But if your burn is high and your cash is low, be prepared for that conversation. That doesn't mean you're going to fail. It just means you have to prepare yourself for the conversation. So yeah, I mean, I think those are some of the things that you might see. I believe that depending on where you're going, right? If you're say you're a company that's going to be, your target is to be purchased by an acquirer, and many companies, you don't know this, right? Who's going to be your acquirer? Am I going to IPO, right? Look further out there. Like, where are you going with your organization? And always try to think out in front instead of just kind of thinking now. And this is just getting ahead of it. That's just what we're talking about. Not just audit prep, but like, where is your company going, and start to teach yourself that.
Wonderful. Well, one, I think listed a couple of questions here that, from at least my experience talking with folks, can sometimes come up. We'll pause for a second and see, Mark, Parker, if any of these are jumping out in particular as things that might make sense to cover, dive a little bit deeper into.
See, we talked a lot about number two, kind of the first audit.
I think
Audit.
one one
Oh, go
one
ahead,
quick
Mark.
note on Dave, one of David's notes around 409A2 is that's definitely something that I sort of felt the pain kind of having conversations with auditors about, and I think that's something that I even recommend other folks running startups I know, where I think people can oftentimes be penny wise and pound foolish. Like, get a good 409A. There are a lot of companies that sort of give them out for free, and they're pretty cookie cutter and maybe not sort of up to snuff, but there's a lot of reasons to go spend a little bit of money and go get a more rigorous 409A for a number of different reasons, both for audit readiness, but also because you can have an actual conversation with the firm and person issuing the 409A about the business, about how you're thinking about things, about the comps, which, if you're going through a firm where they're just giving it out for free, you're not going to be able to have that discussion and sort of really make sure that it's appropriate. So I think that's somewhere where sometimes people make, sort of short-term decisions that are pan out to be the wrong one, and with a couple of years of hindsight.
Yeah, valuable. Yeah, I appreciate that. I think number four, and Julia chimed in on this, do not be afraid to push back on your auditors. They're not the be all end all. There is judgment involved. I'll give an example of something that, this kind of goes with number five, right? You have junior team members. I get a first question of like, oh, year over year flux. Can you tell me why fixed assets decreased month over month? Well, yeah, it depreciated. It's like, but so that person had no idea, right? They had no idea what was happening. And so you get 6, 12, 8 of those comments, and you've had to write an explanation for them. That's time that is like, so you just got to push back. You got to say, no, can you have someone review these before they come to us? So that in that case, you start to see questions like that. Can you say, hey, can you take this to your manager, senior manager, partner, flush these out before they come to us so that we have the real questions and we're not wasting our time with things that are just basic knowledge? Because a lot of auditors have never sat in the seat. Always keep that in mind. They have started an audit, they've been in audit. That doesn't mean they're not knowledgeable. I was there. I was asking some of these questions, so I'm with you. But keep in mind, a lot of them not done debits and credits the way you have. So you have to sometimes coach that, and don't be afraid to push back. Make sure you are project managing them and them not forcing their timeline on you, right? This is your audit, not theirs.
All right. Well, we have roughly 5 minutes left in the hour, so can give that back for folks in terms of what's coming up next. We'll send an email that will include the recording of this webinar, so if it's helpful to send along to other folks on the team, we'll include that as well as this deck. So if there are any particular components that you want to reference back to, and if there's any feedback on things that you would have liked covered, things from your years of audit experience that you think would be helpful for subsequent webinars or content, absolutely feel free to respond to that email. Our goal as a team is to make these really practical and useful. And so want to make sure that we're continuously improving, just as you would continuously accumulate your audit evidence. So thanks again, folks, for participating. Thank you, Mark and Parker, for sharing your insights and experiences with audit, and hope everyone has a wonderful week and rest of, good Thanksgiving the following week.
Yep. Thanks, Mark. Thanks, everyone.
Yeah, thanks for having me. See you.
Thanks, y'all. Bye.